Good morning, everyone. What is going on? Happy hump day. It is 9:37 a.m., August 23rd, guys. Welcome to my channel. Welcome to Digital Goats Academy, and welcome to Digital Wednesdays. Guys, if you see the topic today, the topic is discussing oil. But before we get into that, do me a solid, and everyone that's tuning in, please hit that subscribe button on your way in or on your way out. Hit that like button, and definitely tap that notification bell to stay up to date on all my content. But let's get right into it, guys. So I'm gonna jump on TradingView right now. Let's just talk about oil, right? Is oil a good asset to invest in right now? Now, I know there was a lot of talks between Bloomberg that oil would continue to push up higher. I think the highest they had it going was like 87. You can see based off of my charts that that didn't happen. It fell short of that. So we were at the highest point, and it may be different between brokers. So, if you're looking at my brokers, TVC, your broker may have it at a different price range, but the highest point we went was 84.89, so almost $85 a barrel. But as you can see, once it hit 84.89, that the market started plummeting down. So pretty much we're in a downtrend now. Now, if you were, did I push out setup Sundays? Yeah, if you were on setup Sundays, I pushed it out. It wasn't a live like I normally do, but I pushed it out. I actually drew this out, this downward channel, because I had an expectation that oil was going to do something like this before it decided to break out. So here we are now at the zone that we would like for oil to break and then actually retest. So if you see right now, oil is producing currently, this probably will be an imbalance candle if we don't have it push up to the upside, well, or pull back. So once this candle closes in the next 20 minutes, we'll be able to see what transpires from there. Right now, if you see the momentum, guys, the momentum is heavy to the downside, all right? Strong momentum to the downside. This was pretty much the first breakout candle of the momentum candle. So once we get another candle to form, we'll obviously have an easier time deciding like what the move is, or pretty much where to enter. We know what the move is, but where to enter. So, once price closes this candle, we'll probably have a pushback of 38 to 50% ballpark area, guys. You know what I'm saying? So that's what I'm waiting for U.S. oil, but I don't think oil no more. I know there was like I said, on Bloomberg, there was a talk about it where oil would be a good investment. Now, from this point, yeah, when we were down here at like $67, oil was definitely a great investment, U.S. oil, even when we were at like $74. But I think that's no longer the case. And I honestly think that oil is actually making its way all the way back to, let me show y'all. All the way back to $25. Now, it still has to break levels, but I think the lowest we could possibly go is $25 without going like back to zero. Now, that's a stretch from where we're at. Obviously, that's a stretch. The first point of contact that we would have to have oil break if it reaches down here is $60 a barrel, right? $57, $58 a barrel. We would need a break to confirm and a retest to push the market down even further. But as far as right now, the momentum is definitely strong to the downside. So at the first very stage, I would at least like to see oil come back down here. And I would look for opportunities to either buy or sell once once the market figure out what it wants to do. But we do have a level of structure down here. So if you look, this is a level of support. Let's actually change that. Change that to white, blue. So we have a level of support down here. And how do I know that? Well, if I just stretch this out a little bit, turn it to a line chart, I can see that the market at least dipped right here. It dipped right here and it dipped right here. More than likely, guys, when you're looking at buying opportunities, you want to go as low as possible within reason based off of your technicals, right? So I can see oil coming all the way back down here. And again, I mentioned fundamentals the other day about it. And my fundamentals was that we're heading into the school year. So even though we have more driving as far as like parents dropping their kids off to school, you still have a lot of blocks where there's not a lot of cars or vehicles on the road. So that should start to bring down the value of gas. That should start to bring down the gas prices, guys. So if we have gas prices coming down, we can see that, oh man, I see the price of oil is depreciating in value as well. Makes sense. So as we're heading further into the school year and less people, are trying to be on the road because it's cold, you're burning more gas because you got to have that heat on during the winter, things like that, where, summertime, even if it is hot, you can open your windows or have like one of those mini fans and stuff and still be on the road. So more people are traveling because more people it's summertime, kids are off for school. Maybe you're taking a vacation with your family. So there's way more travel. So it makes sense for the value to go up even higher. So now that we're heading into the school year, heading into holidays, you're probably going to see less and less travel until you get to the holidays. But even then, guys, if prices still remain the same, you're going to have less people on the road. But that was just my fundamentals breaking down US oil. So does the technical show that? Yes, the technicals have been showing that to us, right? So as far as we've been seeing currently right now, oil has been depreciating in value. So you should see gas prices, and we have another push down. You should see gas prices start to come down as well. Until they start to stabilize themselves. I don't know what they will be at. I'm not going to throw a prediction, but, I'm thinking like somewhere in the high of $2 or something like that, $2.70. If that happens, man, timestamp this day if it comes down to like $2.70, because I just threw out a random number. But if I'm right, I'm right. You know what I'm saying? So oil currently broke this level of support. So that's good for us, but the momentum is strong. The best thing is that try to find a position while the momentum is strong, but understand that once it's time to have its pullback, it's going to be violent. So we know that anywhere within this candle, let's say this candle closes like it is, and I'm going to just throw a fib on it, because I'm trying to see the percentage. If this candle closed like this, what percentage or how high the market could possibly travel in order for us to re-enter on a pullback, a better pullback. Yes, the momentum could still drag the price of oil down here, and we could see like, a pullback. It can come all the way back down here. You know what I'm saying? $73 a barrel or $73.99. That's like $73.50, something like that, right? We can come all the way back down here and oil can finally decide to retest this area over here. You see what I'm saying? So with the momentum being high to the downside, we have to look for opportunities to sell. What I would recommend, for my traders out there is that if you're not confident with entering market execution, I would suggest pending orders. You know what I'm saying? That way you technically don't miss the trade, but obviously because you're behind on the trend, you obviously want to make sure your lot size is a little bit lower. But anywhere in this zone, once we get a pullback, if you don't enter down here, like I said, the momentum is strong. So there's no guarantee that price would come back up here yet. But when it decides to, we know that this would be the zone. You know what I'm saying? So I could see more pushes a little bit further down before oil tries to sneak up, come back, retest, and then make its way down. Now, that doesn't mean that it's going to come just 50%. It could climb higher, but at the least or shallow pullback, it would be at least 50%. You see what I'm saying? At least 50. Oh, well, that's 50% would be right here, pretty much at the top of that zone. So if the market came within like a moderate pullback, as I like to say, it would be 50%. If it's more aggressive, it'll make its way probably all the way to 88%. You see what I'm saying? So this is almost exactly how I depicted it, guys. We didn't get a pullback up here. The market just kept dropping. But again, we may get a pullback up here. And if not, we still know we'll have a pullback somewhere within this zone. So somewhere within 88 to 382, that's what we're looking for. If this candle doesn't get retested on the next candle, it gets retested on the next candle, obviously the move would probably be 50% or 618. But if it drops, more than likely, it'll probably try to come extremely high, which would be like 88%, and then dive down from there. You see what I'm saying, guys? So yeah, oil is clear as day. You know what I'm saying? You just got to find your entry. Is exactly what we talked about on Setup Sundays, guys. So if you don't tune into my channel, you won't see this information. You'll be lost and it'll seem like it's the first time that you got introduced to it. But yeah, clear as day, oil's on a downtrend. Just find your entry once you get the pullback. That's what I'm going to do. I know I got out in this consolidation. I missed this drop right here. But again, the retest will give us another opportunity to get in, guys. So don't be the person having FOMO and making poor decisions just because it's like, oh man, it's selling. Like, yes, it's clearly selling, but you want to catch the right entry, not just because, I mean, unless you're a swing trader and it's like you can handle the pullback. But again, I look for the correct entry, not just because it's like a ballpark entry, because I can see the trend of the market. Makes sense, right? Now let's look at gold real quick. I talked about gold. I said that gold was, and look at it. I said that gold was at a level of support at the bottom. Me and my team, me and my personal community, we actually took this trade setup that I threw out. I actually got out a little bit shy of my second TP just because of the lot sizes I was using. But yeah, we smashed all the way through. So I mentioned this on Setup Sundays as well, is that if we get a break, because everything, you know, everything is subjective. If we get a break for gold, what's going to happen is that now you have a clear direction of what it's trying to do. So since it broke this zone, and let me put it into a line chart so it just makes a little bit more sense, right? So if you just draw a line, right, from where the previous high is at, price has yet to retest, but it did break. You see what I'm saying? But it did break. Both of those levels were resistance. It did break, but we don't have a retest yet. We should expect a retest, but I don't know if the retest is going to be shallow because, again, the momentum could be strong. Today, the momentum could be strong. I haven't even looked at news yet. So the momentum could be strong to the upside, where this is one of the days you don't really get the pullback. You really have to enter in while the trend is moving. You see what I'm saying? So that's what I'm expecting for gold. I am looking for a pullback. I don't know when we'll get that pullback, but gold showed us exactly what we wanted to see. A break of structure, clear as day right here, break of structure. So we just need some type of pullback for a better entry if you didn't get in at the bottom. Again, I mentioned this. So if you were in at the bottom, you're still in, you're good. I mean, besides if you probably got taken out because of this pullback right here, but say you got in at this entry as well. So you got in at this entry. If you're holding, you're good. Let's see how many pips that is. 267 pips. Y'all see that? 267 pips. That would be 26 points if you use a point scale. 267 pips for gold currently right now, guys. So if you were to get in that entry, I know nobody really gets the perfect entry, but anywhere in this entry down here, guys, you're still up like anywhere from 80 to 100 pips. So gold has broken our structure. We're at the bottom of support. We're still at the bottom of support. So unless this market decides to like completely turn around, which I don't think that's going to happen, we can consider this a strong level of support. And once you catch the once the market does decide to retest, you'll be able to catch a pullback to bring the market up. I do think that gold is going to try to reach back into the 2000s, only to collect the liquidity that it left over. And it may not. It may just want to respect this resistance here. But I do think there's a lot of liquidity left over. What's liquidity? Money that the banks left over, guys. I think there's a lot of it that hasn't been tested yet, in order for the banks to feel comfortable continuing moving in a downtrend. So I think that gold is going to be on the rise. If you look at other pairs correlating with it or correlating against it, you can look at Bitcoin. Bitcoin is currently in a downtrend right now. Bitcoin has been, I haven't looked at it this morning, but I know I looked at it last night. It was at like 26K on the dot, guys. So gold and Bitcoin go against each other because they're both assets that's unique, right? One is digital and one is actually a tangible asset, right? So when Bitcoin is actually rising, gold should be falling, and not at the same time. Every market has a cycle that it has to finish before it actually responds in that way. But you should see Bitcoin rising, gold falling. Gold is rising, more than likely Bitcoin is rising. I mean, it's falling, guys. Y'all see that? You see the correlation between that, how you can put yourself in the right position. So I'm looking at gold to continue moving to the upside. That should also respond to a couple of other forex pairs as well, such as Euro USD, GBP, maybe not GBP USD, but again, you guys would have to look at it. My forex pair that I trade the most is Euro USD. So I know if gold is starting to rise, more than likely we're going to see a push up from Euro USD. Let's actually look at that real quick. I'm not going to go over it, but I want to see if it's actually pushing up. So Euro USD is still in a downtrend. It is still selling right now. But you see this bullish push up. So I don't know if this was a move to push the market down in order for it to come back to another level of support or a previous high. I haven't looked at the market there, but Euro USD does look like it's on a downtrend. I don't know if at this, like I said, at this point, this could be the market trying to make a turnaround. We are still within the bullish channel. So this was my channel before this purple or pink tool, right? So we're still within that zone where the market could still respect this. So I would still think that this market is still trying to push up because we're still within the zone. If it breaks this zone, then yes, we're obviously in a downtrend, guys. But all it's doing right now currently is looking like it's retesting the zone. And the only thing that I would see from this is that how many of us fall prey to the idea of, oh man, this thing is selling because it broke structure, but really you see support, a break to the downside that seems a little bit lower. Logically speaking, how we're taught is that once you get this break, oh, the market should be pushing to the downside. Well, what if the market just wants to clean up some liquidity that has been left over that we weren't paying attention to, and then it decides to reverse up? So this is your level of support right here, right? This is your level of support right here. The market broke below that, and it looks like it's retesting the actual level of support. Now, if it does produce a selling candle, then yes, we're coming probably all the way back down to this level of support right here. It's not going to play off of the previous high, right? So I still have my fib lined up, right? Let me actually get my new one because I want to see if we're at 88%. All right, 7 and 6. Let's see that. 786. My 786 isn't highlighted. So we're a little bit above the 786. We haven't hit 88%, which is good. So price is still respecting support. Now, if we look at it again, guys, let me just draw a zone to see where it would put us in the market from where the market actually popped up. That definitely looks like a double top. I mean, a double bottom, excuse me. And what I'm trying to do is see based off of the time frame, are we at a previous high? Are we at a previous level of support? So yeah, we're at a previous high. This high over here, it's a little bit it rejected the point between this high. So let me turn this to a line chart, make it simpler. So if you look at it, see, this is why I always refer back to a line chart, because if you just stick on candles, you'll read this information, even though you can see the candle pushing down, you'll respect the candle more pushing down and won't realize that, man, it hasn't actually like pushed down and closed. So right here, we have a clear level of support, and price could definitely reject this. It's already showing that it's actually supporting it. You know what I'm saying? It's actually supporting it. So we could have a rejection that pushes the market all the way back up. That's what I'm thinking, honestly. So it just depends on, like, again, I'm not trading Euro USD, but I'm just showing you guys based off the correlation that, okay, gold is starting to rise. Euro USD, unless impacted by the ECB, it should start to rise. Or if the dollar starts to be aggressively bullish, then it should start to continue to rise. And if you see the dollar, the dollar's been hanging up here for quite a while. So, okay, the dollar did push up. It did push up today, but it rejected that. You see how the dollar is showing like the opposite of what Euro USD is doing? Dollar pushes up, pulls back down. We haven't closed the candle yet, so you don't want to just jump in haphazardly. But it's showing almost the reverse of what you saw with Euro USD, and I think we were on the same time frame. So if the dollar, this does look like a fake out. Let me go to the 4-hour, see if that candle looks like. That should be like a double top. Yep. So if this candle starts to break these levels right here, the first level would be around like 103.442. Breaks that close. Obviously, we need a pullback unless the momentum is just super strong. But this is like a double top, like on the 1 hour. And what we saw with Euro USD, a double bottom. So what I'm thinking again is that we finally hit the zone where the dollar wants to pull back. I do think that the dollar is overall bullish, but we're hitting areas where it should want to pull back. There's a lot of zones that haven't been retested yet that the dollar needs to retest before continuing this move to the upside. And I think that's where we're at. I don't think that Euro USD is overall bullish. I think it's overall bearish, but I do see a major pullback coming unless we don't get that. So right now, it's just showing us a selling candle, guys. I don't want anybody to get fooled by that behavior and think that the market is selling until we have a break of structure. So a lot of people see a selling candle like this, don't have, unless you got in at the top. You got in at the top, I mean, think that it's selling, right? Or and collect your profit. But from this point, we have no clear structure. We really need this structure to be broken right here. Really need this structure to be broken just to confirm that, yes, we are trying to head down and possibly a pullback somewhere within this zone if price gives us that, right? Unless the momentum is just so high to the downside that it just blows through all that. But I do see a major pullback coming because the dollar needs to do that. Now, if it doesn't do that, then I get it. It's happened before in 2021. But we do need a major pullback to at least test some of these levels. I would at least think that the dollar would try to come back to like 100 to retest this imbalance right here in this market. So keep an eye out for this candle specifically. So if you start seeing the dollar sell, obviously, you buy against the dollar. But if it does start pushing down all the way back down here, more than likely it's going to come to that candle, right? Retest somewhere within that region. And if it breaks lower, then obviously we just have to change up our analysis and because of the conditions. But this is your first target right here that the market should be aiming for as far as the dollar pushing all the way down here. So that'll be a major selling opportunity for those who trade indexes, but also those who trade, against the dollar, which is like Euro USD, AUD USD. You'll be able to buy against the dollar. So yeah, I'm looking at a big move, guys. I definitely hope we get it. From the looks of it, from that fake out that the dollar did, is showing that, man, I'm not really trying to go up there yet, but we have to absolutely have a break of this structure and then some type of retest to carry us on. Like I said, I've already confirmed that the dollar is inflated. You know what I'm saying? Everything else now is just, corrections in the market to balance itself out in order for us to start taking opportunities within it, guys. Too easy, right? And the last thing that I'm going to talk about is S&P. Now, a lot of these things that I'm showing you guys, like, yes, these are active entries that I'm looking at. You know what I'm saying? So S&P, I mean, gold, I'm looking at an entry. S&P, I'm looking at an entry. So S&P did fall down this morning, right? So this morning it fell down. And if you look at where we're currently at, so I mentioned this. Did I mention this last week? Doesn't matter. I know I confirmed that. Yeah. I mentioned that we're selling S&P, no doubt. Since we've had the confirmation down here, up here, we know that we've been selling, right? Selling opportunity. But you see what S&P likes to do. It likes to do its pullbacks back to this area, but also start consolidating. So I don't necessarily see this as a push up. I see this as consolidation, guys, because really we haven't broke up out of any structure to confirm that, yeah, we are bullish. We've definitely broken below support to say that we are bearish, but I don't think that we're bullish. I know that this looks like an inverted head and shoulder, but I just don't believe that that's the case. To me, this market, if this market was inverted, as far as like a bullish uptrend, we probably would have been up here already. We should have broken through here and then maybe had a pullback a little bit deeper. So I'm thinking that what's going on right now with S&P is that it's about to start moving sideways in order to confuse a lot of traders. I know a lot of traders probably jumped into the market today and then pushed the market down. But we could have a retest back up here. We could have a retest. The only thing is that it needs to break this first, come back up here. That'll be your next level to discern if it is a selling opportunity. So, but I do think that if we get a push up here, if we get a break like within this zone over here, right here where this evening star is at, I do think that S&P is just trying to retest this area that it initially sold off from. So yeah, that's pretty much it, guys. I mean, I'm not going too heavy. I definitely want to see what more news brings. But yeah, the market is pretty clear today for what we're seeing. You just have to be patient enough to catch the pullback and not be overly aggressive, over leveraging, using too many high lot size that your account can't handle, and you'll have the opportunities, guys. So I think, again, we're going to get, because I know we have news. I'm looking at S&P news real quick because I know S&P just had some news that came out. Blah, blah, blah. All that news was negative, and that was around 9:45. So all of that news was negative. So the next news, major news that we have is dealing with oil. So basically, I would say after, that's in 24 minutes. So I would say wait till a little bit after 10:30, see what oil is doing, and then make your entry from there, guys. But again, we already have what the direction that oil is trying to travel. Same thing with S&P, same thing with gold, same thing with Euro USD. Now, if some of these levels start to break, you get stopped out. Obviously, you have to reevaluate your analysis, all of us, you know what I'm saying, together. But based off of what we've seen, according to technicals, these are the moves in the market. We should have some type of pullbacks or recoveries in order to, re-enter the market and then, take the market down, up, whatever direction you're trading some of these currency pairs in. Now, I'm not going against anybody that does like scalping. So maybe you're in like a scalp buy for S&P. Cool. But I'm looking at the overall move because I am an intraday swing trader, guys, more intraday than anything. So that's what I'm looking at. I'm looking at the overall moves. And again, this move is still ranging. So once we get a little bit more clarification on what S&P is trying to do, if it's going to retest up here or if it's just, faking people out in order to push down. That's what I think is going on currently right now. So if I was looking for an entry, if we got a break below this structure, I would definitely enter there. Because that'll put me at a high position. Or if I'm patient enough and S&P decides to blast off to this zone over here, I would wait for a selling opportunity right here. But, we just got to wait for the news, guys, because again, it could not reach up here. Excuse me, it cannot reach up here. Let me add a fib to that. See where we're currently at in the market. I think we're at 786. I think we're at the 786 zone of this fib. I don't have that on because I just got rid of it because I know that between 88 and 618 is 76%. So once this market gives us more clarification, I think that this might be the resistance zone that it's trying to create to push the market down from, what is that? That is 44.15. So 44.15, 44.20. Yeah. Looks good to me. So that looks like an M pattern too. If the market did respond that way, that looks like an M pattern as well. So that's what I'm looking at, guys. I don't think that this is a inverted head and shoulder. I know it looks like that, even with this short-term retest right here. Now, again, if it starts breaking these zones, and yeah, S&P is bullish. And at this point, August 23rd is where the market got bullish again. So we would just look for bullish opportunities from there. But I don't think that S&P is bullish right now, guys. So yeah, that's what I'm looking at. I gave you guys 3 potential setups. I didn't give actual entries. That's up to you as a trader to find your entry. But we did look at the directions together. So I mean, as far as technicals, the direction is clear as day. So nobody should have an opportunity with being confused on the direction. Maybe S&P because it's ranging right now, but everything else is pretty much straightforward. So appreciate you guys for everybody that joined in. Again, guys, I have a community on Discord if you guys want to tune in. I think on my last video I posted, I actually dropped it in there. It is a Patreon, so I appreciate everybody who's a part of my Patreon already, guys. You're definitely helping the channel grow. And yeah, we're just going to win this year. That's my goal, to help other traders win. And also put myself in the room with other winning traders. You see what I'm saying? So as always, guys, hit that subscribe button on your way in, on your way out. Hit a like button. Comment if you guys like something. If you didn't like something, hit that notification bell to stay up to date on all my content. And as always, guys, see you at the top because we're taking everybody to the top this year. Thank you.